Lower by now.
Everyone said lower.
Yeah, everyone said lower. I'm not sure, but we'll take that. I guess maybe let's do an audience poll. Who here has been, who here thought Bitcoin would have bounced back by now? Any hands? Yeah, we got a few hands. All right, great. So here we are. I mean, it's been now more than a year of crypto winter, some people like to call it. I guess, I'd love to hear what you guys, as investors, what have been the lessons that you've learned? I mean, is there any way that you found to make money in this market, ride it out, and what is the strategy now for, being in such a prolonged bear market? Michael, do you want to start?
Yeah, well, I think a lot of lessons learned. Ones that I think we were aware of but hadn't experienced yet. So things like liquidity, drawdowns from the start of the block tower we discussed, it's not a matter of if we'll experience an 80% drawdown, it's a function of when and how many times over the course of the next 20 years. I think there were some market movements that caught everyone off guard. The strategy last year was clearly arbitrage and quant. If you were in that game, you performed well. More the discretionary directional trading clearly had a much more difficult path. But again, I think what it comes down to, particularly as we all sit up here primarily as hedge funds, is kind of staying true to your mandate, and liquidity was something that caught a lot of people off guard. And so, if you were certain to be intelligent about how you constructed that part of your book, at the very least, you had the ability to kind of maneuver in last year's or in this crypto winter.
Louis, I see you jotting down some notes.
Yeah, I think I would just agree with Michael there. It was just the thing that really took us off guard was the frequency of the drawdowns. And so after we had one peak to trough drawdown, we would think a lot of the weekends had been cleaned out, but actually no. It was just going to see an oscillation around that. And I think from our perspective, our risk management could have been better. Getting ready for, having seen the magnitude of the drawdown from 20,000 down, we should have been ready for that. So it was just the frequency that really caught us off guard.
Robert, what do you think? How is it going with this crypto winter?
Well, I'm an optimist, so I think that we have hit a bottom. It seems like there's been a lot of trading range over the last quarter, and volumes, at least on our platform, are picking up. So I'm optimistic going forward.
For us, we're I cannot label us as a high frequency-ish trading firm. So for us, market direction doesn't matter as much. But now with vol having come off, one thing we realized is kind of microstructure matters a lot. Some of what we look at isn't kind of macro trends, but it's more kind of on the kind of individual, say derivatives, contract side, looking at kind of funding and spreads. Liquidations and how kind of that affects effectively the spot market. I think one trend we've seen over the past 12 to 18 months is the price discovery used to be in the spot markets. You would have bid stand, tank first, and then cracker would follow, and then all the margin platform would follow. Whereas these days it's largely driven by derivatives. You have a large liquidation go through, and that pulls down kind of spot across the board. I think that's indicative of kind of more sophisticated market players coming into the space.
I think in 2018, clearly, long-only strategies, buy and hold strategies, and diversification, those myths kind of came to reality. Obviously, profit-taking, the ability and comfort to even hold cash, shorts and arbitrage strategies were really the only thing that returned well. I'd say one thing that's been surprising and sort of frustrating right now is the sustained sort of high correlations amongst all these assets, which makes sort of shorting as we approach the bottom a bit more risky. But yeah, I definitely think that sort of a shift in mindset from these diversified strategies into sort of what the end game will look like, sort of shifting the narrative from these ICO focuses, and just generally the bear market has caused a lot of people to be more critical about the space, which I think is an overall net positive.
Tintin, you mentioned that you've had some success finding derivatives, ways to hedge against some of these, maybe even shorting some of these assets. Can you talk a little bit about that? And have you been able to actually make money while things are going down?
Yeah, sure. So we don't tend to take kind of bigger directional views. So if we're buying somewhere, it's very likely we're selling elsewhere. Or if we're buying, we're holding a position for a few seconds up to a few minutes. So I mean, there is kind of a lot of exchanges out there where you can trade either futures or swaps or other form of kind of leverage products. Like kind of Alex said, like one of the, I think the difficulties is there tends to not be a lot of liquidity in the altcoin space. So what trades in derivatives tends to be kind of the large cap, the Bitcoin, Ethereum of the world. But throughout last year, if you could kind of proxy hedge. I think this year going forward, our correlations will start to break down. So running kind of proxy hedging strategies is increasingly kind of risky as these correlations start breaking down. But kind of at the same time, my view of the space is going into kind of 2019 is we're going to have way more crypto-native derivatives come to the market, which I'm super excited about. So we're a liquidity provider as well as a speculator. So we like having kind of not only depth in the market, but also a breadth of products to trade. So as opposed to different forms of spot instruments and different coins, what we're looking forward to is kind of newer forms of crypto derivatives, as opposed to just another Bitcoin retro swap or a futures contract. Things like stablecoin futures, speculating on Tether, a leverage format, or I can think of like hash rate derivatives, like swaps on Bitcoin and hash rate or Ethereum and transaction fees, or maybe even let's say a CFD on the size of the BitMEX insurance fund, would be pretty fun to trade as well, or like the spread between virgin coins and non-virgin coins. I can think of a lot of these things. I think kind of market participants would have an interest in because it tends to be very crypto native. So I'm not so excited about like the backed, kind of the CBOE, CME kind of stuff, but more so the kind of crypto derivatives.
Yeah. Alex, we were talking earlier about some of the risks of shorting too. Can you explain a little bit about what you've experienced when you've tried to, I guess, short the market?
Yeah, I guess talking broadly, in 2018 it became, and in 2017 too, it became very clear that most of these altcoins just trade with a higher beta to Bitcoin. When Bitcoin was going up in 2017, a lot of these alts rallied much higher. We see stuff like that. Even like today, Bitcoin goes up 2%, a lot of alts rally. In the bear market, it was the opposite. As Bitcoin was declining, all these alts were declining much further. So is the big question with a lot of us now is has Bitcoin bottomed? And people are pretty torn on this issue, but at a minimum, it seems we're probably pretty close in terms of timing and price. And if that's the case, while these correlations remain elevated and before really bad events happen to altcoins, things like regulatory action or hacks, really as we approach that bottom and Bitcoin gets closer to turning around, the risk of shorting if these altcoins remain higher beta is just extremely risky. So right now the risk reward of altcoins is probably down significantly, and a better hedge might be something like just cash. So essentially it's just the fact that they're higher beta and remain highly correlated.
Yeah, I think we'll just add to that, the correlation and concentration effect is obviously very significant, but the thing to be aware of when we're looking at shorts is obviously the amount of free float and how much of it is actually out there for you to short. And so if there's a project where there's only, say, 10, 20, 30% outstanding, then it's very open to manipulation. So that makes it much harder to short because you can be short squeezed on it. And so that's something we're always mindful of. But from the perspective of Bletchley Park, one of our big focuses is always on diversification of counterparty risk. And so one of the problems we faced during the bear market was we would only have maybe 10% of assets on any one exchange at any one time. And so that would mean that the amount of exchanges affording us short capacity just wasn't enough to meet the needs of the rest of the portfolio. And so we were frequently finding ourselves having to cut the long exposure, probably at the worst time, as is the nature of trading, just to offset the fact that we just didn't have enough capacity to offset that counterparty risk. And so when I look to where we are today, I'm actually fairly excited when I see people trying to set up synthetic prime brokerage, more abilities to short on the new exchanges coming through. And I think that's going to be a great way to stabilize the market.
Do you guys have anything to add on this topic? Tanta, you said something interesting about stablecoin futures.
That sounded bad.
Yeah, maybe talk a little bit more about that, because as far as, isn't the point of stablecoins that they're always pretty much $1, at least if they're tied to the dollar like Tether is and many of them are?
Yeah, sure. So I mean, stablecoins are meant to be stable, but the price in the secondary market doesn't always reflect the one-to-one exchange rate. Right? So I think most people saw the tether blow up. It was a few months back when it traded almost 15% discount to par. I think back then, everyone and their mother was rushing to find some way to bet against it. I think back then there was only one way to really run a short tether position, unless you had LTC lending offer, and it was to be long on Bitfinex and to be short on OKX or elsewhere. In fact, you're capturing the tether to dollar spread. But I think, because a lot of what trades in the space is with tether, tether is still embedded as a major quote currency as opposed to a base currency on all the major exchanges, meaning you see BTC against USDT, ETH against USDT. That still makes it kind of the largest stablecoin by an order of magnitude. And so because market participants are forced to have this exposure, I do think it's kind of broadly consensus in the market that no one is really that comfortable with kind of counterparty risk of tether. And hence kind of having an avenue to kind of trade and speculate or hedge your tether exposure, I think is interesting.
Robert, what are you seeing in Caspian in terms of what stablecoins are people owning? What are they using them for?
I think one of the big trends is a shift to trading pairs across different exchanges, trying to capture market movements. So instead of taking directional risk in altcoins, people are starting to trade the different pairs across the exchanges. And so that's one of the things that Caspian tries to provide is a unified interface across all exchanges, all pairs, so you can see it from a single interface.
Who on the panel is holding or hasn't done anything with Tether, or do you prefer other stablecoins? No Tether? Any other stablecoins?
Stablecoins, we've looked at the Gemini coin, obviously MakerDAO, but generally we tend to stay away from stablecoins. The way we've structured ourselves is that we tend to be working with regulated exchanges, so we can move dollars quite easily. But obviously, we prefer moving stablecoins because we get all the benefits of that crypto kind of transferability and speed of transfer. So right now, actually, we're very excited by this JP Morgan coin. Ripple should be pretty scared by it. For them, it's just a test bed, but we can see this becoming possibly the stable coin.
So no one else on this panel owns any stablecoins?
Well, we've made early stage investments in one or two projects in the space, but nothing from that.
Yeah. Maybe talk a little bit more about that. So, because you invest both in tokens themselves, but also have some equity positions. How do you break that up, and what kinds of opportunities do you look for?
Yeah. So at a high level, I don't think you should really exclude any part of the opportunity set. I think a lot of the industry's evolved with the risk appetite. So it's gone from high demand for ICOs to high demand for liquidity to high demand for equity. Right? So as people's risk appetite has come in, you've kind of moved higher up the cap structure. Right? You say tokens are even on the cap structure or not? I would say technically not. So a lot of the opportunities today that present themselves at the early stages are typically some hybrid or some blend of that. Usually, as a fund manager in this space, you have the ability to help structure those early stage deals, and so you can negotiate for an investment to have both equity in the company, warrants, both public and private warrants on that specific company, as well as tokens if and when there is a token issuance. So, I think you should still, as a hedge fund, focus on the liquidity of your portfolio because that's what your investors expect of you. But you shouldn't exclude an opportunity because it's not in a liquid form, but you should have to size it according to your book.
Yeah. Alex, what about you guys? Do you do both equity as well as tokens?
We try and look at pretty much everything. We have a very flexible fund mandate. I would say in the equity space, I think as this shift away from, like ICOs happened, the problem is there's still a lot of capital in the space in some of these like larger VC firms, and the fact that, this capital is not allocating to ICOs anymore due to 2018's bear market, regulatory risk, etc. it's almost like this capital needs to be deployed. I would say there's only so many talented people and good projects in the space. So one thing that I kind of struggle with in equity space is I feel like the valuations are still massively overinflated, and kind of these top projects, it's because there's almost stale capital that needs to be allocated, kind of bidding these valuations up. I also really don't see many very favorable, attractive business models. I think kind of crypto is still heavily dominated purely by speculation. So really, most of the revenue is just coming from people that are able to insert themselves between some sort of speculation, like an exchange to charge fees. And also, we just haven't seen too many exits in the space. So in general, a lot of these equities I generally describe as just overvalued, lack of good revenue model. I don't see the exit, and it's just not that liquid. So we look at stuff, but I'm probably not as excited as a lot of these others on equities.
Why do you think there isn't more of a trade-off? I mean, here you have the market itself, the actual cryptocurrencies come down so much, and yet then you have these companies that's a major part of their business. You'd think that they were giving something up on trade volumes or whatever it is, but it doesn't affect their valuations at all. They're still looking overvalued.
It's just there's no secondary market for these to dramatically fall in value. Maybe their revenues are suffering. Trading volumes in the space has definitely come down, but essentially it's just this private VC market that's shielded from the rest of the crypto market. So a lot of these investors are maybe still just marking their VC investments at the cost that they invested in. And some of these projects have been just building for a year straight, so really not much has happened. So it's kind of just shielded from the rest of the market, I would say.
Something else you've seen is companies who have done ICOs previously are now going back out and raising equity rounds, which is interesting. Obviously, they don't want to dilute themselves, but I think a lot of them are searching for a true advisor. So the space has gone a bit from being a capital provider to more of an advisor relationship. Even as a hedge fund manager, you have a lot of dialogue with your portfolio companies, and you probably should invest in whether they're in a liquid or a liquid position. So that's been an interesting evolution of the business model, where you have these companies that were able to raise in the falls of 17, $30 million in an ICO, and have now for a year and a half sort of been in limbo, trying to figure out exactly how they accrue value to their token holders, right? Which I commend them for trying to do that, and they're really trying to understand exactly what the market demands to get value to accrue to the token, and so they're willing to give up equity to company for that.
Speaking of ICOs, that was a huge, still pretty hot topic here last year, but you don't really hear as much about it. I think maybe that's some of the regulatory issues, especially in the US, but are ICOs dead now? What do you see, Robert?
I tend to agree. There's not a lot of ICOs going on right now, but I think the next wave are STOs. I think there's a lot of firms in the US that are going through STO filings. And there's also a lot of filings around ATSs in the U.S., which I think is going to provide a lot of opportunity for the market.
Any examples in particular?
And STOs, I don't have any specific examples. There's no to talk about specifically, sorry. But STOs are security tokens, and I think that's going to be kind of the next evolution in the space, where people are going to get, because there's more of an intrinsic value to the token. I think people can get their head around that better.
Yeah, Lewis, do you agree with that?
Yeah, I think I would just loop back as well to Alex's point in that because the market has changed so much. Last year, if we were looking at an equity investment in an ICO, we actually couldn't get the equity investment. We just couldn't. They wouldn't grant us that access. Whereas now people are very open to, hey, why don't you take some equity, take some tokens as well. And there's definitely a synergy there. When you're looking as an investor, if you can help model that the token economics as an equity investor, that lines up much better than just being a dumb ICO investor who can't actually impact the dominance. And I think one of the biggest problems of last year was there was just a complete absence of governance on most of these token projects. And other hedge funds and ourselves, we tried to enforce it, but the market was so hot we couldn't actually say, hey, you guys need to get a chartered accountant as your CFO. You don't have to hold it all in ether. Whereas this year we can actually begin to steer things in a much more constructive way. And I think the upshot will be the fact that we have funds with pedigree in corporate structuring can actually begin to create real value in these projects. So some of the STOs I'm now looking at are definitely equities, and they may come through with a second token. So the STO we'll see will be an equity in the project, and the next round will be an ICO or a utility token. I think that'll be a much better combination of token economics.
Can you talk about any examples of ones where you see opportunity?
Can't tell you.
I would say the STO, I like the idea of the STO market. It's certainly gained a lot of credibility over the last year. The issue is the infrastructure on the STO side. There's just no liquidity. There's no liquid live exchanges right now for those assets. So it's really hard for, obviously it's a more regulatory compliant structure, which brings comfort to both the investor and the issuer. But when it comes to actual trading of those assets, it's a bit more difficult.
If I can jump in on a comment on STOs specifically, I'm kind of bearish on the whole idea. I don't think it quite makes sense to fit into like a crypto fund portfolio. It's essentially, a lot of people like the idea because it's like an equity. We can model out the equity cash flows, so it ends up having the economics of an equity investment with some added risks of like the crypto shell. Essentially, I'm investing in crypto and our LPs want exposure to crypto. Just putting STOs in this portfolio just seems like, getting the economics of a pure equity investment that doesn't seem like the appropriate place in sort of a fund that's trying to capture the, potentially massive reward of the crypto space.
I agree with Alex. I don't like the word intrinsic value because value is never intrinsic, right? Like value is a relational term. Like the right price of Bitcoin is where it's trading at now, because that's the difference point between buyers and sellers. I think within the SEO space as well, it's quite important to differentiate kind of the various narratives that are going on. I think when people say STO, when people think about putting real world assets on the blockchain. But if you invest in a real estate STO, you're no longer a blockchain investor, you're a real estate investor. I think what is more interesting is tokens that are stakes in networks or that have security-like characteristics. I think BNB is a pretty good example. Maker and MakerDAO is a good example. These are tokens which are not STOs in nature, but they have security-like components, right? Through implied dividends or burn or buybacks. I think that's where we're going to see a lot more shift in tension going this year. Acquiring or kind of stakes in crypto networks, but with security-like characteristics as opposed to putting real-world assets on the blockchain, which is more like an improvement of the back office.
Hey, are you more bullish in general on some of the altcoins versus things like Bitcoin, Ethereum, or is it still worth buying and trading, kind of the major coins?
I'm quite excited about coins like Maker, but it's a very hard token to trade. It's not listed in many exchanges, and hence you have to kind of discount your activity or what you're doing by the liquidity profile. So much of what we trade is still Bitcoin, Ethereum, Bitcoin Cash, Litecoin, XRP, etc.
Is it the same for the rest of you, that more of the trading is still in Bitcoin, Bitcoin Cash, Ethereum?
Yeah, we tend to be, our high-frequency trading and arbitrage programs will still be focused around the most liquid coins. But I would take the other side of the STO argument in that, yes, kind of making it crypto equity adds crypto risk on top of early-stage venture equity. But at the same time, it does liberate venture capital equity markets to the retail investor, which is transformational, which is something we haven't seen. And so I'm very excited about that. And I think what we could see, in my mind, over the course of this year, we'll have to see exchanges evolve to host these STOs first. But I think we'll see a series of very small cap fintech equities that are tokenizing, may not necessarily be actually doing anything on the blockchain, but they will be crypto assets. As a regular equity investor, that's really exciting because we can begin to apply standard metrics for evaluating these things and find spectacular growth rates in very early stage companies, which would be the equivalent of a round B, round C, that you typically would never have access to, especially if you were in America as a qualified or accredited investor, you just wouldn't be able to get hold of it. Whereas now, this kind of liberalization, I think is going to be very exciting. And it's going to take a little bit of time, but I think in the first 12 months, we'll see some small market caps, and hopefully from here, we'll see some unicorns emerge out of the tokenized equity space. And that, to me, is very exciting.
So between STOs in the small cap venture space and SoftBank at the large cap, no companies will go public in the foreseeable future.
Correct.
While we're talking a little bit, predictions for the future, you were talking before about, you think Bitcoin's near a bottom. Do you guys agree with that? I mean, you hear things Bitcoin is, in the market in general, is close to bottoming out or hasn't already?
The one thing that I say a lot to our LPs and to people that I speak with broadly is absolute price bottom may have set in, it may not. I think the psychological bottom is in. Whatever that's worth. I don't think we have, if I'm looking at this from a risk reward perspective, it's an extremely attractive time right now to be investing.
What about you guys? Do you agree?
I agree. I think, I think the bottom, if it's not behind us, it's going to be this year. I think also, for Bitcoin, it's a long-term game. Right? So buying at 3,000, 4,000, even 10,000, if the view plays out, it doesn't really matter anyways.
Robert?
Like I said at the beginning, I think we have hit the bottom. We're definitely starting to see a lot more interest, a lot more trading activity than we have, after November crash. So things are picking up.
My issue is there's sort of just still a lot of negativity left in the space that I really wish would wash out in one dramatic final wick that, some buyers are buying. There's still a lot of fake metrics in the space. There's still a lot of, illegal offerings that the SEC is probably going to come down on. In my view, it'd be a lot more obvious that we'd hit the bottom if we got one final dramatic capitulation wick, followed by a lot of, buying volume. Essentially, once all the negativity was washed out of the space, all we'd have to go left is up. And I guess to your point about, where do you allocate in the next bull market, I guess a lot of it comes down to how you sort of see the actual asset class, playing out in the long term. If you sort of take a view of what I've been describing recently as security maximalism, if blockchain security is correlated to price and, one eventually, takes off by far and away, then sort of all wealth and all valuable applications should be secured by this sort of one leading chain. If you believe that view, then sort of, and you still believe that, which I do, that sort of these altcoins will probably trade at a higher beta to Bitcoin in the next bull market, what you end up doing is kind of, following which one you think will be the eventual security and value leader, and kind of viewing everything else as a trade, and really trying to, take the short-term profits. And, the interesting trades would probably be, in my book, ignoring everything that did an ICO cuts out a lot of the space, and then looking at really anything that has a unique characteristic to kind of the leader, which is Bitcoin right now, which is maybe things like, privacy transactions or sort of alternative security models. But it's sort of how you see the end game truly, if it converges onto most of the value and security onto one asset, or if you believe in more of a multi-point type of universe.
Yeah, I was just thinking about it. I don't think the bottom of the market's in yet at all. I think the market's becoming saturated with new exchanges opening, and I also think the regulators have yet to really take down any exchange of significance. And I think from experience of trying to determine when the market bottoms in, what you have to do is really wait for bad news to impact and then see how the market reacts. Right? So right now, if there was some bad news about maybe a top 20 exchange being shut down by the SEC, this market would drop 50%. It would just crater, right? And so until we can get to a stage where the market can comfortably stomach bad news, the bottom is probably not in.
I think one last thing just to note, we're as a hedge fund panel, and I know the price of Bitcoin is important to everyone because we're all somewhat levered to it, but one thing to note is 2018 it was hard to make money, 2017 it was hard to lose money. It didn't matter if you were the smartest active manager in the world. I think the forward for hedge funds is actually very bright because active management really matters now. We're starting to see price dispersion below the Bitcoin level. Bitcoin's been fairly consistent at 3,800 in that range, and now we're starting to see a lot of dispersion amongst the altcoin space. And so as hedge fund managers, we should be managing towards active alpha. And so I think with the development of the markets, the development of things like Haxpian and the OTC providers in the derivative space, we'll be able to tap into that alpha in a much more significant way.
Yeah. Well, that's all we have time for. Thank you guys so much for being here. Great discussion.